And when you get into these high prices, like in Vancouver and Toronto, where you've got $1 million variable rate mortgage, and all of a sudden your rates spike, you're taking on a lot of risk. I mean, obviously, I think that the markets are still expecting the Bank of Canada to continue to get a few more cuts in this year. Obviously, yeah, you could debate the merits of like if they should be cutting, given they have an inflation mandate. Inflation's still above their target today. If you look at the inflation components, one of the components that's still dragging CPI inflation higher is the shelter component, which is about 30% of the CPI basket. But yet, when we talk about, resale housing prices, those are declining, rents declining. You're kind of like, well, is there really any shelter inflation today? I would argue no. I mean, I would argue that we're in disinflation, but obviously we've had so much housing inflation over the last 5 to 10 years that perhaps, a bit of deflation in the housing market's probably a good thing. I would say this, what I would try to encourage, like, your listeners and a lot of our clients is this is a market I think we have to be really careful. I think Canadians had a propensity to go on like a variable rate mortgage. And so just know that you're taking a lot of risk. Just know that can move. And when you get into these high prices, like in Vancouver and Toronto, where you've got $1 million variable rate mortgage, and all of a sudden your rates spike, you're taking on a lot of risk.